decision on inflation target, which is certainly incredible and historic. But let me show you very quickly commodities, because we're going to talk about them. The WTI is trading so far $43 per barrel, which is up about 0.13%. The Brent is $45 per barrel, 102% higher. Certainly, we're going to delve deeper into the energy sector. But first of all, let me bring to the show Yousef Alshammari, CEO, Sea Markets. Good morning, Yousef. Thank you so much for joining us.
Hello, Alexandra. Good afternoon.
Yousef, I'd like to kick off with a Hurricane Laura that is definitely disturbing a huge part of the United States. Why don't we see, and certainly all producers and refineries that are shut down so far, why we're not seeing any reaction of the market?
All right, that's a very interesting development. Currently, what we saw is some developments in the hurricane systems in the Gulf of Mexico that have led to about more than an 80% reduction in the production from the Gulf of Mexico. That equates to around 1.7 million barrels of crude being cut from the Gulf. About more than I think half of the platforms were evacuated, and not only that, but also the refineries on the Gulf Coast and both Louisiana and Houston, many of them actually went offline. So we are talking here about 2 million barrels outage from the total United States refining capacity. Well, your question on why the response is limited. Well, we've seen some rise in the price over the past couple of days, but where we saw Brent reaching slightly above $46, and also there was also a similar trend for WTI. Yet there we also have some bearish factors influencing the markets, and that mainly includes the COVID-19 crisis happening in the United States, in Europe. Now today, we've both the UK and France are on alert of rebounding cases. Also, the recovery and demand remains sluggish. The situation in the economic situation in the US, these are also factors that are currently being considered in the markets that have led to limited response on the supply cut happening in the Gulf of Mexico, especially over the last day. Yet, over the past couple of days, we've seen we saw a much stronger response.
I would like to talk about the latest OPEC meeting. I was wondering, first of all, what is your assessment of their policy? And secondly, do you believe that we're going to see compliance with the oil output cuts until the end of the year? Because I believe we are at the point of compliance between 90 and 95%, but not 100%. And that was also a concern for the Saudi Arabia energy minister.
Yes. Well, according to OPEC data regarding compliance, total compliance from both the OPEC and non-OPEC was between 95 and 96% for the month of July. The largest, let's say, overproducers were Russia, Nigeria, Iraq, and Kazakhstan. If you look at, in fact, of course, the compliance rates vary among them, with the lowest compliance coming from Nigeria at around 65%. That's if we do not include low-producing countries like Gabon or Congo or any of the others. The challenge is that, like, you have Iraq, for example, having a commitment to cut by about 850,000. On top of that, they need to cut about 400,000 barrels a day in month of August, and also a similar amount in the month of September. Also, Nigeria, they also have made a pledge to cut extra 114,000 barrels in this month, and I believe also a similar amount in this month. So you have total additional total deeper cuts from OPEC plus will be about 1.15 this month and the next month. To be honest, okay, I'm very hopeful that OPEC can reach 100%, but I'm still doubtful about how can Nigeria achieve 100% up from currently 65%. That's I'm still not sure about, even with the case of Iraq. But for Russia, I think yes, they could easily achieve that. It's not a big amount, and given the fact that they did achieve 100% in the previous months. But I think the main challenge remains in Iraq and Nigeria. Also, given the economic situations in these countries, I believe I'm not sure if they will be able to achieve 100% compliance. Yet I think that, on the other hand, that the compliance will increase from 95 now or 96. It could go up to 97 by the end of Q3.
We saw some positive macro data coming from China. We cannot say the same for the United States because we saw still stable unemployment rate. On the other hand, we did see the second quarter GDP literally plunging at historic lows. Despite it was better than expected though. But at the same time, we do see a quicker or swifter economic recovery coming from China. Can we expect any change in demand, seeing that China is getting back on track in terms of economic performance, seeing the fact that it also is the major importer, crude oil importer, and it also acquired a very important quantities in the past month?
Certainly, if you look at this year, demand in China was affected because usually we have economic growth in China at around 6%, 6 to 6.25. This year, the growth in Chinese economy was around 1%, mainly due to the corona crisis that happened, or mainly had Chinese economy beginning of 2020. So if we see a recovery in the Chinese demand or Chinese economy, certainly that will be reflected on oil demand, and that should bring China to import at about 12 to 13 million barrels of crude a day. But if you look at the fuel demand data in China currently, they seem to be much better compared to the data in the US or in Europe. Why is that? Because China certainly has bypassed the crisis much faster compared to, because they had it fast. And if you look at their road transport demand, their aviation fuel demand, they all seem to be back relatively to pre-crisis levels. Yet their economy continues to be not to the levels compared to its level before the COVID-19 crisis. However, China, by the way, is the only country that did not record any economic shrinkage this year compared to other major industrial countries. So I am quite optimistic, although we have also to bear in mind that China has stored a lot of oil, and currently they are taking a chance of that, exporting that oil to India and other countries, because they bought the oil at the time when the prices were around $20, and they have so much in storage.
On the other hand, I was wondering at this point, which are the major market movers for the crude oil price fluctuations at this point, because we don't see important movements, at least currently in the past 1 month, let's say. Are we going to stay around this range in the medium to long term, or at least till the end of the year?
Our expectations was about a price of $50 at the end of this year. You are quite correct. We have seen prices about stable at between, let's say, $45 to $44 during this month. And I believe there are major factors affecting that. And the first factor because COVID-19 crisis is still present, at least in the industrial countries. Oil demand continues to be about 92 million barrels. Aviations remain very limited globally. And on top of that, we have now seen major losses recorded by oil companies, and some of them have wrote down or have written down actually some of their hydrocarbon assets. So I believe these are some of the factors that currently have contributed to a kind of less than expected prices for oil in the month of August and July. Yet I do expect that prices should recover. They could go above $50 by the end of this year, or at least in Q1 2021. But that will mainly be dependent on a recovery from the COVID-19 crisis, return of aviation sector, and a possibility, which is a vaccine that can be developed and recover or help the financial markets towards recovery.
All right. Thank you very much, Yousef Alshammari, CEO, C Markets. Thank you for joining us.
Always a pleasure, Alexander. Thanks for having me.
Thank you once again. We're going to take a very quick break. Stick around because we're going to talk about CanSino, a Chinese pharmaceutical maker, which is making another milestone. And of course, we're going to delve deeper into the future central bank's monetary policy and the current foreign exchange situations. In particular, we're going to take a look at a US dollar and Japanese yen, because what is going on there is really interesting. Stick around, folks.